has announced a major acquisition. The company will acquire a 59% stake in commercial vehicle manufacturer SML Isuzu for 555 crore rupees and will also launch an open offer for 585 crores for an additional 26% stake, as it looks to strengthen its position in the trucks and buses segment. With the acquisition, M&M is likely to immediately double its scale of production and is eyeing tripling that by FY31. Joining us now to talk about the road ahead is Anish Shah, the Group CEO and Managing Director of the Mahindra Group. Anish, many thanks for joining us here at the CNBC-TV18 studio. It's great to have you and congratulations on getting this deal done. But let's start with valuations. A big difference between what you offer the sellers and what the minority shareholders get. It's 650 versus 1554. Take me through how you arrived at the 650 valuation.
I would just say that it's a fair valuation for all concerned. And for us, we've always followed a very structured process in terms of focusing on certain businesses, investing where it makes sense. And it made sense for us to invest at this value because we feel that from here we can grow the business and deliver returns for our shareholders, which is a very important aspect in how we look at this. And therefore, a blended value is what we really saw. That's what we're finally investing. And on that basis, we feel that it's a fair and appealing deal, which has a very good strategic fit as well.
I'll talk about the strategic fit in just a second, but let's just get through the nuts and bolts of this. By when do you anticipate all the approvals to come in? And of course, you do also now need to make an open offer. By when do you hope to close the deal?
So typically, 60 to 90 days is the process. And we hope to be able to stay within that time frame and close it then.
I know you've said that you intend to keep this a listed entity, but is that the plan as far as the foreseeable future is concerned, or is that the medium to long-term plan as well? Do you envisage a future of this being a separate listed entity?
That is the plan right now. I'm not sure whether that will change or why it will change, but we feel that it is important for this to stay as a listed entity and be able to compete in its segment effectively.
Okay, let's now talk about the synergies and let's address this at the back end to start with, and then I'll get to the front end. At the back end, what do you believe the synergies can be, both in terms of the capacities that you have and how you intend to make use of those? What's the plan on the back end?
So, Shereen, scale matters. And there are synergies across the entire spectrum. To start with the back end, it's looking at first the product complementarities and the investment made in developing new products. It is about procurement, the manufacturing strengths that come in. And this is where M&M's manufacturing strengths will play a huge role as we look at building a stronger stake in this segment. But before that, let me even take a step back and talk about why this makes sense overall. If you think about different segments we play in, we're in a strong leadership position in almost all the segments we play in today. SUVs, we've gone from a 12% to a 23% market share. And we don't really play in all the SUV segments as yet. Despite that, we're at 23% market share. In tractors, we've gone from a 38, 39% to 43, 44% now. In electric three-wheelers, which is a space where we really had a small business in ICE three-wheelers at a 7, 8% share, we are now at a 43% share in an ultra-competitive market and we're the #1 player in that segment as well. In LCVs, we are at 51.9%, up from the low to mid 40s a few years ago. So we're playing in a very significant way in multiple segments. This is one segment where we have a 3% market share. And there are actually different parts of this segment, because when we look at greater than 3.5 ton commercial vehicles, you've got a light and intermediate commercial vehicle segment, and then the MHCV after that. In light and intermediate, we've got a lot of strengths that play to what we do elsewhere. And that's where SML Isuzu also has a number of strengths. And that combination is a powerful one. So as we think about that scale, and therefore coming back to your question, at the back end, from a manufacturing, product, sourcing standpoint, and the talent, of course, there are significant things that are positive for us.
I'll come to talent in just a second, but the growth aspiration, especially leveraging on the back-end synergies that you spoke to us about, 10 to 12% market share from the current 3.5% market share. You feel confident of being able to get to that by FY30?
We feel confident we can get there, and we have a target of 20% plus for the next 5 years. and therefore we want to put this business on a very significant path for growth.
And what does this now mean as far as the front end is concerned? In terms of dealerships, in terms of franchisees, what happens on that front post this deal going through?
So there again, we see a number of synergies, but we will leverage what we have in the business today because we are in a growth mode. This is not an acquisition about a cost rationalization. This is an acquisition to help us broaden the footprint to go bigger on growth. And that's where the dealership footprint that exists in SML Isuzu will be a very meaningful one for us. In addition to that, how we sell to the customers, the service we can provide, the ability we will have to be able to meet their needs across a much wider footprint, all of that is a positive for both the businesses, and which is where scale comes in a bigger way.
So when you talk about growth, you gave us some indication of the kind of levers that you intend to deploy as, in order to drive growth. What could be potentially some of the others? Because you made it very clear that this is not about cost rationalization. This is really about your aspiration to grow in this space. What will be the growth drivers, the growth engines for you here?
So it starts with products, and that's the advantage we have in Mahindra Trucks and Buses as well, is a very good set of products, and that's similarly what we see in SML Isuzu. The second aspect is the ability to deliver those products at a compelling price for our customers, and that's where our manufacturing sourcing strengths come into play. The third is the ability for customers to be able to look at what they get from this, save cost, be able to address any challenges very quickly, have a wide footprint to be able to get service and parts and everything else that they require. And as we look at all of these three aspects, if they're done well, that allows us to play in a much bigger way in this segment.
Speaking of playing in a bigger way in this segment, I mean, this is a fairly competitive space as well. But since you're talking about forecasting for the future now, is an ICE future the only future that you're looking at, or is an EV future also part of the plan as far as this segment is concerned?
ICE and EV. And SML Isuzu also has a very strong pipeline for electric vehicles. They have showcased some of that at Bharat Mobility. And that combined with our strengths in EV will allow us to put forth a compelling set of products.
How soon can we expect the EV side of this portfolio to be out of the market?
I don't have a timeline on that, but from my understanding, it's going to be in the near future, not too far off.
Near future would mean, a year, 2 years, a longer period?
My sense is probably in less than a year.
In less than a year?
But as I said, we have to do more work to really fully understand it. And once we fully understand it, then we can commit to timeframes.
So in terms of next steps now, are there likely to be any changes on the people front as well? Are we likely to see any restructuring on the people side as well?
So we have a lot of respect for the management team at SML Isuzu, for the business, for their employees, dealers. I think it's a very well-run business. That's a big plus. And therefore, as we think about growth, we're going to leverage the talents and skill sets. So we will work together to see what makes sense overall for every leader and for every employee. But we are going in with a mindset where we have a high degree of respect for them. We feel that they can do a lot, and they can help us actually build this business and take it to where we want to take it.
Just stepping out of this particular acquisition to what's happening as far as the marketplace is concerned, I'm sure you've seen the comments that Mr. Bhargav has made at Maruti Suzuki on what's happening really as far as the low-end market is concerned, where the pain continues to exist. What is the sense that you get, about spending capacity at this point in time and how that's likely to drive consumption or not aid consumption as much as it ought to?
A lot is defined by the products that we have as well. And we've seen and continue to see a good demand for our products. More on that, Shereen, I will hold off till our earnings call,
yes,
which will be exactly a week from today. But on balance, we've seen a good market. We have stayed with the commitments we've made year to date at least. And as you've seen our numbers for volume for both SUV and tractors month over month, they have been fairly healthy, the volumes that we have declared publicly.
On the EV launches that you did, and that of course was a big pivotal moment as far as the journey is concerned, what's the update? What's the status check? What can you share with us on how that's panned out so far?
Our customers love the car. I love the car. I
Is that
love
what
driving
you're driving?
it. Yes, absolutely. And it's just so much fun to drive. The power, the technology in the vehicle is just truly amazing. And I can't drive another car after this right now. And that's the feedback we're getting from customers. Right? We've had customers who see the car and literally, even friends of mine who've just seen it and said, okay, so when will I get the car? I'm buying it now.
What is the growth curve, Anish, really, as far as electric mobility and electric cars in specific are concerned? And I'll also ask you this in the context of what we're seeing happen globally, where we have seen a sort of tempering, a significant tempering as far as electric mobility is concerned. What's the sense that you get here? And, in a future where perhaps in a not-so-distant future where we're going to see more competition in the form of Tesla and Elon Musk entering the Indian market?
A lot depends on product. Because if the product is a wow and delivered at a reasonable price range, the customer is going to want the product. Right? The next question will be on charging. And our vehicles today offer a 500 to 550 kilometer real-life range. Certified is 682 and 656 for the two vehicles we launched. So we've taken that anxiety away. I charge once a week. And most people in cities will need to charge once a week only, unless you're going out of town. Charging on highways is not there as yet, but that will come up very quickly. And that's something I know the government is very focused on and is driving as well. So once all of that happens, an EV offers a much better value proposition in many ways than an ICE. There will be specific ICE products that customers will want, and that will continue. So we don't see ICE going away completely. But we see EV taking a significant stake of the overall share.
So what is the current market share and what's the aspirational market share as far as the EV segment in the car space is concerned?
For India, currently it's 1.5%, which is very, very low. With the products we have, we feel that we will get to 30% EV penetration in the next 3 to 5 years.
A large part of your tenure so far has been about consolidation. It's been about making sure that you fix what needs to be fixed and then focusing on the growth gems that you want to take forward. Do you now feel ready and comfortable to take on more M&A likely, just the way that you've done this particular deal?
We will continue to be very structured in our approach. Our first year was focused on capital allocation. Then we pivoted to growth after that, and we really pushed all our businesses to think big, to be able to deliver a lot more, and that's what we've done across our businesses, including our growth gems. Starting last year, we said we will again pivot to delivering scale, and that is a faster growth trajectory, which is again something we have been able to demonstrate across businesses. And that's the phase we're in right now. But we will look at each business, make sure it can actually deliver what it promises. And if it does, we will put more power behind it, more capital behind it, and enable it to grow.
So, you talked about some of the tailwinds that you're focusing on. But if I could ask you about the headwinds currently, it is a very, very volatile global environment. It's an uncertain global environment with the way the tariffs are playing out. But specifically from your point of view, what are you concerned about today? What is worrying you in terms of potential headwinds?
The world is a very, very uncertain place, a lot more than we had ever imagined it would be. I remember we talked about black swan events that happened once in a lifetime. Now they probably happen every month. So our approach is to be agile and to be able to respond to things as they happen. Having gone through COVID, it's made us much stronger. The semiconductor crisis was a very significant one for the auto business. Therefore, what worries me is actually what I don't know in terms of what's going to happen tomorrow. What we know, we've got plans in place for, and therefore, we want to stay very agile to be able to respond to things as they happen and pivot where we need to.
Exports was a big part of your plan of growing the business as well, and that's been a fairly small percentage driving your revenue so far. Does that change, or are you approaching the export business differently in light of the current state of flux?
So it's been a little slower than we would have liked, largely because of the success we saw domestically, because the kind of demand we got for the products we launched, we just couldn't deliver in time. And sometimes that's a good problem to have. Now we are focusing on exports more, but specific markets. We want to try to get to a 15% market share in certain markets before we go to the next set. So it's a fairly ambitious set of plans, but again, one that's done in a structured and disciplined manner, where we're picking certain markets, trying to get to a certain market share there and then move elsewhere. So
where are you closer to being able to get to that 15% market share in the markets that you've already forayed into?
In South Africa, Australia, and Chile.
Okay.
Right? These are three markets also that have very little domestic manufacturing. And that's one where we've played in over time. We've had distributor setup, a brand that exists as well. And the products that we're launching there now are seeing a lot of very good demand. So we should be able to we are in 10% in one of the markets already in a segment we play in, at 5% in another market, and therefore we're on our path.
Digressing away from auto for just a second, because one of the other potential growth areas, especially again in light of all the developments that are taking place globally as well as locally, Mahindra Defence, what's the playbook looking like at this point in time, given the many factors that you have to contend with?
So we play only in the transportation and security areas of defense. So armored vehicles is one that we have been supplying to the Army for many years and continue to be at the cutting edge of technology there. In fact, that's where our trucks and buses business helps as well, because there are synergies across both. We're doing a lot in terms of security systems, in terms of counter UAWs, in terms of surveillance mechanisms and surveillance underwater systems and so on. So it is a big area, and we feel that in transportation and security alone, there is a lot that can be done. We do not want to play in the ammunition-related areas of defense, and we are therefore staying away from that.
Back to the deal, and you said this is going to be a win-win as far as shareholders are concerned. So, outside of the expansion, what is it going to mean in terms of the margin profile changing as well, given the many synergies you already spoke of?
So our focus is on growth right now, and therefore
will that also entail significant investments? Or
we feel that the investments that we plan for in our trucks and buses business should be sufficient. We may come back and take a look at it. There may be some changes, but I don't expect a whole lot. And SML Isuzu is generating a fair amount of cash as well, so that will help in their investment plans. Margins will improve over time, but our primary focus right now in the short to medium term will be on growth. And as we drive that growth, we will see a continued improvement in margins.
Well, Anish, it's always a pleasure. Many thanks for joining us here on CNBC-TV18, and thanks very much for taking us through what this deal means, but also a whole host of other issues that you're focusing on. And of course, look forward to hearing more from you once the results are out and the silent period is over. But thanks very much for joining us here. That's Anish Shah there, taking us through what the deal with in the LCV space means for the Mahindra Group, and how this is going to be a strategic opportunity that they intend to build on. We'll take a short break here on the record and return with the markets right after this. Stay tuned.